As the U.S. markets are currently closed, the last available price for HIMS and HERS Health Inc., trading under the ticker HIMS on the New York Stock Exchange, was $62.76, closing up an astonishing $8.74, which represents a massive 16.18% gain in a single trading session on Wednesday, October 15, 2025. Now, a surge like that immediately grabs headlines, and the common narrative you'll hear is that a telehealth company simply had a good day, maybe on the back of a positive analyst rating or some fleeting sector-wide optimism. The general expectation for a company known for discreetly shipping hair loss and erectile dysfunction treatments is that it's a niche, high-growth but ultimately limited D2C business. But that expectation is now dangerously outdated. The reality of what drove this explosive move is far more significant and signals a fundamental transformation in the company's trajectory that the broader market is only just beginning to comprehend. This wasn't just a good day. It was a violent repricing of the company's future, centered on its aggressive and incredibly strategic push into one of the most lucrative segments of modern medicine, the weight loss market. Let's be direct. The market has long viewed HIMS as a clever digital marketing company that happened to sell health products. Its success was seen through the lens of customer acquisition costs and subscription churn rates, not as a serious healthcare disruptor. Many investors, perhaps managing their portfolios through platforms like Fidelity or SoFi Invest, likely categorized HIMS alongside other high-growth, high-risk tech stocks, far from the stability of something like Apple stock. This perception, this expectation, was that HIMS had found a profitable corner, but that its growth would eventually hit a ceiling as it saturated its core demographic. The 16.18% jump is the sound of that ceiling shattering. The reality is that HIMS is leveraging its trusted brand and incredibly efficient telehealth infrastructure to bypass the traditional pharmaceutical distribution channels, offering compounded GLP-1 medications, the same class of drugs as Ozempic and Wegovy, at a fraction of the price. This isn't just adding a new product, it's a calculated assault on a $100 billion market, and that surge in the stock price reflects the first wave of institutional investors realizing they've profoundly underestimated the company's ambition and its ability to execute. Looking at the trading session itself, the volume was simply immense. We saw a trading volume that was more than 5 times the 3-month daily average. This isn't retail speculation on a Robinhood app. This is the signature of major funds and institutional players taking substantial positions. When you see volume like that accompanying a price spike, it tells you there's conviction behind the move. It suggests that large asset managers, the kind that use sophisticated platforms from providers like Interactive Brokers, have run the numbers and concluded that the company's earnings potential has fundamentally changed. This wasn't a slow and steady climb. It was a gap up at the open that held its gains throughout the day, closing near its session high. This pattern indicates that buyers were aggressive and absorbed any selling pressure, a clear sign of bullish control. This is the kind of momentum that makes HIMS a standout, not just in the healthcare sector, but when compared against the performance of even mega-cap tech names like Nvidia stock on certain days. Investors are seeing a pathway to profitability and scale that just wasn't part of the consensus view a few months ago. The common ground we can all agree on is that HIMS built a fantastic low-friction platform. They took sensitive health issues, destigmatized them, and created a seamless online process from consultation to delivery. That's their origin story. But where we must challenge that common understanding is in the application of that platform. The expectation was that they would simply add more of the same, maybe skincare, maybe other lifestyle ailments. The reality is that they are using that same engine to tackle one of the largest public health challenges and, by extension, one of the largest commercial opportunities. By offering compounded injectable weight loss treatments for less than a quarter of the brand name price, HIMS is making these therapies accessible to a massive segment of the population that was previously priced out. This move dramatically expands their total addressable market from tens of millions to potentially hundreds of millions of consumers. Think about the the strategic brilliance. They already have a database of over 1.5 million subscribers who trust them with their health. Cross-selling this new high-demand service is infinitely easier and cheaper for them than it is for a new company starting from scratch. It's a classic land and expand strategy being executed to perfection. Of course, this aggressive move doesn't come without scrutiny. There's a heated debate around compounded pharmaceuticals, and regulatory risk is a genuine concern that any investor considering self-investing needs to understand. Competitors and traditional pharmaceutical giants will undoubtedly push back, and the FDA could tighten regulations. However, HIMS appears to be navigating this by working with licensed and reputable compounding pharmacies, emphasizing quality and safety. The risk is real, but the potential reward, as reflected in the recent stock performance, is immense. The market seems to be betting that HIMS can manage the regulatory landscape effectively, just as it has navigated the complex state-by-state rules governing telehealth for years. People setting up an individual brokerage account and looking for growth stories are now forced to consider if HIMS has a more explosive potential than even some high-flying tech stocks. Let me ask you this, and I want you to comment below with your thoughts. Do you believe HIMS' direct-to-consumer model for GLP-1 drugs gives it a sustainable advantage over the pharmaceutical giants like Novo Nordisk and Eli Lilly? Now, let's briefly touch upon what the company is at its core for those who might be newer to the story. HIMS & Hers Health Inc. operates a telehealth platform that provides consumers with access to medical consultations and prescription medications for a variety of conditions. It started with men's health, focusing on hair loss and erectile dysfunction, then expanded to women's health with offerings for sexual health, skin care, and more. Their business model is primarily subscription-based. A customer goes to their website or app, completes a health questionnaire, has a virtual consultation with a licensed healthcare provider, and, if approved, receives the medication discreetly by mail. This model is built on convenience, affordability, and privacy. Historically, their financials have shown rapid revenue growth, driven by effective marketing and an expanding subscriber base. However, profitability has been elusive as the company invested heavily in growth and customer acquisition. The recent strategic shift, particularly into the high-margin weight management category, is seen by analysts as the clearest path to not just growth, but significant and sustainable profitability, a key metric for anyone looking for serious investment help or using tools like Schwab Intelligent Portfolios. Looking forward, the future outlook for HIMS & Hers is a fascinating study in this tension between expectation and reality. The bullish scenario, which the market emphatically endorsed with the 16% rally, is that reality will far exceed past expectations. In this future, HIMS successfully carves out a significant share of the weight management market. Their subscriber base swells to several million, driven by this new offering. The high-margin nature of these treatments accelerates the company's timeline to profitability, leading to a substantial re-rating of the stock. They continue to expand their platform, adding more services and becoming a one-stop shop for personal wellness, a true disruptor in the healthcare space that successfully competes for consumer dollars. Their investing sites profile shifts from a speculative growth play to a profitable healthcare technology leader. However, the bearish scenario exists, where reality falls short of these new, heightened expectations. In this version of the future, competitive pressure intensifies. Other telehealth companies, and perhaps even giants like Amazon, enter the low-cost GLP-1 space, compressing margins. Regulatory bodies could crack down on compounded drugs, cutting off HIMS' primary supply advantage. Alternatively, the brand might struggle to transition its image from a niche provider of embarrassment medications to a serious, broad-based wellness provider, limiting uptake of its new services. In this case, the recent stock surge would be seen as a speculative bubble, and the price could retreat significantly as the growth story fails to materialize as hoped. Investors using platforms from Fidelity Investments to SoFi Investing would need to weigh this risk of a narrative collapse. Ultimately, the HIMS & Hers story is no longer about a simple D2C company. The market's previous expectation was that of a clever but contained business. The 16.18% surge signals a new reality being priced in, one where HIMS is a potential giant in the making, leveraging its digital platform to disrupt one of the biggest markets in modern medicine. The stock's dramatic move wasn't just noise. It was a clear signal that the narrative has changed. The disconnect between the old limited perception of the company and its new ambitious reality is what created this powerful reevaluation. Whether the company can fully deliver on this new promise is the central question that will determine its future. But for now, the market has placed a very large and very clear bet